Hello, I'm so happy that you're here because today I get to share with you the 3 myths that must be debunked in your journey to financial freedom. Let's jump right into something that's going to serve you. So I had my team dive in deep to doing a lot of research to figure out some topics that could be of interest to the business owners that we serve. And we came across one particular video that we saw online. And this particular video was laying out the steps that people should be taking in order to put themselves onto the path of financial freedom. One of the interesting things is, one, it had more than 4 million views. But really what was so impactful to me is that a lot of the topics that were actually being shared were really not steps, in my opinion, that would put you on a path to financial freedom. So I asked my team to really dive even deeper, try to figure out whether or not these are themes that are coming up time and time again in videos. And in fact, they are. There are certain myths that keep getting shared online, and I want to do my part right now to help debunk those myths. And if you're a business owner who's interested in taking your life and your business to the next level, you're going to want to make sure you stick around to the end because I'm sharing a bonus that you're not going to want to miss. But for now, let's jump right in to myth number 1. So a common myth I keep hearing coming up is how an emergency fund is something that could put you on the path to financial freedom. It's not that I have a problem with the concept of an emergency fund. In fact, I actually think you should have an emergency fund. My issue with this myth is that an emergency fund is something that puts you on a path to financial freedom. I just don't agree with that. I think an emergency fund is something that puts you on the path to having a safety net. And safety nets are great. In fact, what you should do is you should calculate how much it is that you're spending each and every month. And when you do come up with whatever that number is, multiply that number by 3. When you have that number, now you have a target to work towards each and every month, contributing money to this environment where you're pooling assets that will be available, God forbid, if something happens to you from a financial perspective. Let's say the hot water heater goes, or you get a flat tire. You have the resources that can help you tackle those short-term issues. The other thing that I hear that often comes into play is that sometimes people should be working towards 6 months or 12 months worth of an emergency fund. I just don't agree with that. I think that if you need funds that are greater than taking you through 3 months worth of expenses, well, the issue isn't not having enough resources, the issue is not having enough skill sets. If you work to accumulate 3 months worth of capital that can be available in that short-term need, once you get to that number, then if you shift those financial resources that you would otherwise be putting into the emergency fund to grow it even larger, if you shift those monies to acquire now skill sets, you will have the tools that you need. God forbid, if you are separated from your ability to earn income through your traditional employment, you'll be able to take those skill sets out into the marketplace and get the revenue you need to live. Now, there are a lot of voices out on the interwebs talking about myth number 2, about how if you pay off your debt, that puts you onto a path of financial freedom. Now, the issue I have is you really need to understand that there's a difference between good debt and bad debt. Let me define my terms. Good debt is when you use other people's money to acquire assets. Assets being those things which you control, which generate cash flow for you. Bad debt, on the other hand, well, that's a certain state where you're using other people's money, but now you're acquiring liabilities. And liabilities are things which continually take money from you. If you've made the mistake of using other people's money to acquire liabilities, don't make the second mistake of blindly just paying that debt off early. You really do need to do the math. Is there a better use of the capital you would be deploying to pay off that debt early? If there is, well, then you follow that other path. If there isn't, well then yes, make sure you pay that debt off. Another myth that I constantly hear has to do with retirement plans, specifically putting as much money as you possibly can into a retirement plan each and every year. Now, this particular myth is near and dear to my heart because one of the businesses that I own is a financial planning firm. But the challenge I have with this particular myth is that most of the people who are espousing it just don't understand our tax system. So if you look at the history of taxes here in the US, the vast majority of tax rates that have ever existed have been higher than they are right now. So if you are of now the same opinion that we're at historically low income tax rates, and if you share my opinion that tax rates are only going to be going up from here, then you recognize the horrible issue with this particular myth. Because if you take money today that you're earning today and you put it into a retirement plan, you are essentially deferring that income tax to a future year. When you take the money, withdraw the money out of that retirement plan. And in that future year, the income tax rates could be substantially higher than they are today. So when you're making a decision to put money into a retirement plan, you first and foremost need to understand, is there a better way, a better utilization of those funds? So now you can start to see some patterns unfolding here, right? So just to recap, you're not going to want to necessarily take your excess capital each and every month and deploy it towards overfunding an emergency fund, or deploy it towards paying down your debt, or deploy it even into a retirement plan. You see, those three things do not necessarily lead to the outcome of financial freedom. Instead, what you should absolutely be considering doing with that excess capital each and every month is figuring out a way that you can use that money to acquire assets. Now, if you're one of those business owners that's struggling to figure out, how do I actually come up with the capital, the excess cash each and every month to deploy towards asset acquisition, I have a bonus for you. You see, the solution is simply to figure out how to keep much more of what you're already working hard for each and every month. Did you know that more than 9 out of 10, to the tune of 93% of business owners in the United States, are overpaying your income taxes each and every year? Now, I've put together a free web event for you to jump into. It's outsmarttheirs.com, and when you jump into it, I'm going to be sharing with you the 3 secrets that I've cultivated over the course of the past decade or two to help me keep more of my hard-earned money and stop overpaying the IRS. I can't wait to see you on the inside. Bye for now.